This was a pretty good week P&L wise, and the theme of the week was stagflation. The data, see what it's basically data suggesting lower growth and higher prices, uh, recession, but not necessarily recession, and inflation. And on Monday, Dallas Manufacturing Index, this is near the lows, came in as a surprise of minus 14.5, so data surprising negatively, and that's the theme of the week. Then we had on Tuesday we had the ECI, which that this gave us that pullback on Tuesday before the Fed meeting because it came as a surprise at 1.2 versus 0.9 expected, um, and benefits as well. Like everything was a surprise, some bigger than others. Then we had the Chicago PMI, which was already very low and in contraction territory. Basically, for PMIs, below 50 is contraction and above 50 is expansion. So if you see PMI numbers that are below 50, meaning this is negative. And it came at 37.9. Uh, Basically, every time the Chicago PMI goes below 40, then we have a recession. Even this November 22 print, when we had those two consecutive quarters of GDP contraction, if you remember, uh, negative Chicago PMI. On the other hand, bigger than expected wage growth, so this is inflationary, and this is recessionary. House prices remain high, like huge beat, again inflationary from 5.9 to 7. Uh, Services index came in negative, significantly negative as well. Then we had manufacturing PMI, which came slightly below. It's been in contraction for quite a long while. We had jobs came in a bit below, and might signal a bit of a crack in the jobs market. Okay, manufacturing prices huge bit from 53 to 60.9, again inflationary. New orders still contractionary. Construction spending negative. And on Thursday we had unit labor costs came in as a huge beat, and we had non-farm productivity negative. So this is recessionary or slow growth. This is inflationary. And Friday finally we had the services PMI, which went into contraction for the first time in a long while. At the same time as services prices going up quite a lot to near 60. So everything was like this. Basically, everything that says that tracks price went up, meaning inflation. Everything that tracks productivity or activity went negative, meaning recession or slower growth. Doesn't mean we get a recession necessarily or immediately. And some cracks in the jobs market as well, like NFP came in below expectation, JOLTS came in below expectation by like 400K. Where's JOLTS? Less, 8.7 versus 8.5, so just 250K. So yeah, but that's kind of the theme here, and I think the market will continue shrugging it off until the next CPI print. If the next CPI print is hot, I think the market will start pricing in stagflation, which is very, very negative for stocks. The last time that happened was the 60s, 70s period, and we had those big, actually, I'm not going to show it on SPY. We had those big broadening formation pullbacks, which they were huge. I can show on SPX. Let's do monthly. This started in the 60s and ended in the 70s, but we also had it a bit towards the end of the 70s, meaning major corrections. Ballpark it, not gonna do it exactly accurate. And we actually have a setup to do something similar like to this as well. Uh, have the potential actually, not necessarily the setup. So yeah, this is where we are now. And my assumption is that because it's a bit of a momentum, and we're kind of in this Goldilocks zone narrative-wise, we will continue going up and do like a classic distribution pattern like we did at the top of 2021. This is a distribution pattern. We go up, pull back, go up again, retest the highs, go up again, retest the highs, and when we lose this level, which we retest here, we just do a flush, uh, and it's even bigger than the size of this. So we are here. The neckline, let's say it's here. In theory, when if this distribution pattern is confirmed, when we actually go below, this would be the target, something like this. And this is a very decent level, in my opinion. It's the previous top. Can take this with a grain of salt for now. We note it, and when the time comes, we will look at it. But this, if we have like a prolonged bear period, this should be the target. And to be half and half, like we may go, let's say we go to 530, and then it lines up almost perfectly. But for now, I think we continue going up. On Friday, it was 70 UVol. Uh, at the lows, it was around 60. That's why I was saying, but it's not that good. So we haven't had an impulsive kind of bullish move where a lot of buying comes in and everyone is FOMOing it, at least not yet. And given where we are and calendar-wise, we only have a week until the next CPI print. Basically, so I think it's going to be on the 14th. Uh, I don't expect we will get it. So we grind up. There's a bit more room in VIX to go down. I still think 12 VIX is where we stop, but 12 VIX is nothing. So assuming like another, let's say 10%, 11% in VIX, that gives us what? Reaches of the highs. That's it. I don't think we go significantly above that. And we have a horizontal trendline breakout, horizontal breakout, AVR recapture, and so on. So this is bullish short term, but I don't see it going significantly above 525. And distribution patterns don't have to be three waves. This might be a single wave. It depends how quickly we get there, how big the correction is. But my expectation for now is we go up, we get to this area here, and then we get the combo of OPEX, CPI print, then potentially NVIDIA earnings in this week. I have to look up, I think it's in this week for NVIDIA earnings, but don't remember exactly. And if all those three are bearish events, for CPI it's almost certain that it will be, OPEX it will be. If NVIDIA earnings is bad as well, then we actually might see that big drop happening soon. And when we hit the AV up from the low, I think we overshoot it at the minimum. Uh, because we need to create conditions where we trap bears, and if the support happens and the bounce happens at exactly the right point, there is no surprise. So we need to overshoot a bit, then people start going full tilt bearish, and they start shorting the hole. We push it a bit lower at that time, but then eventually it reverses and it catches people off guard, and we get that V recovery going crazy. Uh, this this correction here might not come until September, so don't go crazy with it. But for now, the target is we go up. Target is the retest of the lows after the next CPI print. Then maybe we go up into June, maybe we don't. This is completely optional. We might do this directly um, di directly into June. Like we all this period between May and June, from OPEX until OPEX 21st, I think. Yeah, 21st is June OPEX. This could be the low. Like if we start going down around May OPEX, we continue going down until June OPEX. We make a long-term bottom. We go up the whole of summer, and that's kind of it. But we shall see. For now, the only thing that we need to know is we continue going up, retesting the highs with potential overshoot until 530. 530. This is absolute top. And then target is retested the lows here at 495-ish, 94-ish, with potential to get to the AVU up from the high, from the October low. Okay, then let's look a bit at fangs. This last looks kind of good. Here. So we got impulsive moves down with volume. Now we're going low volume pullback. We're sitting right on support. If you look at lower time frames, this is a kind of a cup, and it should try to take 200 again. Maybe it succeeds and goes a bit higher. I personally don't think it succeeds. Like I think it can overshoot a bit, like go to 10-ish, let's say, but then it will reverse back down. Apple had that big move on Friday, and not a lot to say about it. Uh, you see this is also distribution pattern in Apple, and if it continues up, you should see something like this. Again, overshoot a bit, hit 200. 200 should be a wall, gets rejected, and then we get this. Nvidia has been relatively weak. Let's see now what earnings are on. So on the 22nd, I'm feeling a sell the news kind of thing for Nvidia earnings. This is the pivot. We have the target here directly. Should see something like this, and then a big dump on earnings. Google, haven't looked at Google in a while. Is this a breakout? So like this, like this, because multiple points of contact. We have contact here, here, and here, and a bit lower. Yeah, this looks good. Contacts here. Uh, yeah. What's this? It's 180-ish. 180, 185. And then we'll see. Amazon had earnings, right? Yeah. So I like Amazon, but I still think it does this. Now that we have room to go up, this is a good sign or a bad sign? back-to-back days with volume in which it failed to go up, and then it goes up on but on lesser volume and has follow through on even lesser volume. I don't like it that much. I mean, of course, it can go a bit higher to with the market, but I kind of expect it underperforms. I like it a lot if it would go down here. Like this cup is amazing if we get the 50% retracement, which will be around here. So if we get this and then we have a move back up, then we get the breakout, and the breakout is gonna be epic. Let's measure from here. Target of 285 if, or 290. 290 if we break out. But it has to do the handle first. And that would require a pullback to a minimum of here, ideally here at 140. For now, short term, I think it will struggle breaking out here. Like maybe goes to 200, then get rejected. So 200. But if it goes to 200, it shouldn't go as low as 140. It should be the other level, like 160. Like this. Microsoft. This should be lower, like this. So we have a breakout. We went below, and now it's kind of acting as resistance. Big, very big spot. Maybe this, but the next time it goes below, it's going to be fatal. Like it should do something like this. If it doesn't hold. If it holds, it goes higher. But given the bias, I can see this like being a head and shoulders. See? Shoulder, shoulder, head, neckline, let's say it's here. And we go up to 420. And then we have a breakdown, which the target would be here, not all the way down, but like I said, overshoot. On the next one, we should see an overshoot. Let's draw meta as well. So we have 3 points. Let's do a channel now that we have 3 points. Something like this. Yeah, lines up pretty well. We have contact here. I'm lining up the mid now so that we have the best contact. So like this, I think. And this one we ignore the tilt. We ignore this piece here. Contact here, contact here, support here, resistance here. Yeah, I think this is it. And it looks similar to Microsoft, like breakout went below. So target should be 495, 500. Let's just call it 500. Just looking at these things, like they're not bullish. Like we have fake breakouts across the board basically, but they're not that weak as well. So we should see on the daily, it's not going to be visible because we pull back a lot. But when I do a weekly, the next move up will be for 100% on a bearish divergence. Netflix. For Netflix, it's pretty simple. I think the target is the gap fill. Now, it can go higher than that. So one is here like 600. Let's say retest of the high, 641, and that's it. On the other hand, some and oil, I think it will go back up again for a bit. The problem with commodities is the recession scare. Like when the stagflation scare will turn into a recession scare very quickly. So I think commodities will top out towards the end of the month. We just started May. If it's not here at OPEX, it will be here. At initially, I think there's gonna be some safe haven type of behavior in commodities, but they don't look that good anymore. And the top one is copper. We're getting into this top area, which was the top last time. Initial contact with it got us a rejection. Um, at best, it goes into a range like it did here, like a distribution. It's a couple of times, but eventually maybe fails. Even if we continue retesting the highs, this is still a high. And I don't really see a reason why it would break out here. And this means also inflation will calm the fuck down, but we are a couple of months before that. Expectation is we get another CPI print, hot CPI print for um, this month, and most likely we get a cooler one in June for May, and that will also help set off the reversal that we get at June OPEX if this bearish uh, scenario plays out. There's oil, and oil sitting on this AV up area on this horizontal level, very oversold. This is where it usually bounces on RSI. So I think we get this like a fake breakdown kind of behavior here, and we actually start going up, and we go back to 85, maybe even higher, which is the highest. But that should be type. I don't see it going higher, and the next time it drops, it should drop more. Maybe do like 70 again, something like this. But again, take it with a grain of salt. What I am confident in is this piece here, not this piece here. Once we get to that time frame or we get to this high, we reevaluate. Okay, that's it for now. Have a good one. Bye bye.